Hey, this is René. Welcome back for another video. Today I want to talk about a stock trading project that I currently working on.
This video is presented by BM Trading. Learn to code your own expert advisors. Link in the description.
This is not really like short-term day trading. This goes a little bit more into investing kind of trading. So for everyone who's just seeking quick in, quick out strategies, this is maybe not the video for you. For everyone else, let me explain my thought or my idea. My idea was that the stock market, and this is the US 30 that I opened here right now. In theory, the stock market, if I go to a weekly chart, for example, it should go up, right? Because most of the time, the economy is actually growing, people are working, they produce value, and this is pretty much how the stock market works. So the companies become more valuable, and the index that holds these companies goes up in value. That's the most basic economic principle on the financial market. So this index here, the US 30, as the name suggests already, it contains 30 different stocks. For example, this is a bad example because Tesla is not in the US 30, but these are just examples for stocks, just to show you that besides the index, also individual stocks should go up most of the time. I think this big gap here in Tesla is because of a stock split. But yeah, you can see Amazon, Nvidia, like most of the stocks go up over the years. Some of them more, like Nvidia, some of them a little bit less, like Amazon, and some of them, of course, would also produce losses in a period of like 10 years. But all in all combined, it is like this. So my idea was, why not write an automated trading program that just buys all of these stocks? This is pretty much what we know already as an ETF, exchange traded fund, but this is not really what we want to do with leverage products like CFDs and Forex. With leverage products, we want to make use of the leverage. There's one big downside because this leverage comes at a cost. And if we have a look, for example, at Amazon, and if we go to the specifications here in the market watch, we will see the costs are exactly what we see here. There's the so-called swap. And in CFD trading, we usually have a swap, or we pay a swap if we hold positions overnight. This is different for every broker. For IC markets and IC trading, the brokers that I use, the swap for stocks is in percent, which means that if I would hold the Amazon stock for 1 year, I would pay a total of 2.59% right now for a long position. For a short position, 2.41% for the whole year. So if the Amazon stock is at 100 every single day in the year, I pay 2.6 euro or US dollar in fees. And then I realized that these swap rates, of course, are different for all of the days because we have 5 trading days in the week, and on weekends, there's no trading for stocks. So this is why brokers usually have 1 day with a increased swap rate. In this case, for stocks, it is usually Friday. So if you hold a stock from Friday to Monday, you pay 3 times the swap, which then is a lot. Or in other words, if we have the chance to save this triple swap rate here on Friday, wouldn't this be very, very clever to just not hold stocks over the weekend? And this is something that I wanted to figure out. So I wrote a quick trading program, which I can show you real quick. This is my stock portfolio manager. And what I just did is I created a class for my stocks, then I had a bunch of inputs, and then I looked up all of the stocks that are currently in the Dow Jones, in the US 30, and I found them here on the web page. You can find them, of course, on a lot of different web pages. And I was able to find most of these stocks in my symbols here at my broker. This is currently IC Markets, I think. And I found all of them here, so I added all of them to an array. So now I have all of the stocks. The only exception is Sherwin-Williams. I don't even know what they do, but I was not able to find the stock CFD, so my broker actually does not provide it. But the rest of them, I found them and I put them into an array. So I have 29 of the 30 stocks of the US 30 in my stocks array. And what I then did is I wrote a program. I don't want to go into detail here. I just wrote a quick program that opens positions on one day and closes positions on another day, and that's pretty much it. So how does this look like? If we have a look at this in the strategy tester, for example, I can show it to you. So here you can see I used my stock portfolio manager program. I use the symbol US 30. It doesn't really matter what symbol I choose. And I want to test the period from 2018 to 2024. This period is not chosen randomly. I chose this period because I do not have data for other years in my MetaTrader terminal. My broker only provides the 1 minute candles from, I think, somewhere in 2017. So I started my test in 2018. So just to explain why I chose this period. And then, of course, I chose all the data that I currently have in my terminal. So I have the longest possible period to test. Then I choose 1 minute open, high, low, close as a modeling method. I think it's not important that we choose every tick here or every tick based on real tick, because this is, as I said, it's more like investing. It's not really quick in, quick out. We do not have a stop loss or anything. And I will show you in a second what this program does. And deposit is 25. This is also not random. And I will show later why I chose 25,000. And then, visual mode is active. And in the inputs, we can see I open on Friday, 22:54. So 10:54 p.m. every Friday, I open a position in every single of these stocks. And then on Monday, shortly after the market opens for US stock trading or US stock CFD trading here, I close these positions. And that's pretty much all I do. The risk for every position is 5% of my balance. And I just trade every position. So to show you how this looks like, I will do a visualize test first to quickly show you 1 or 2 examples how this program now trades over the weekends. And let me fast forward. Here we will have the first position. This will, as you can see, this takes a while to load now, because now when the first positions have to be opened, it is loading all of the charts, all of the data for all of the stocks. And there is the position. So let me show this to you real quick. So here we can see we opened the positions in the stocks like just 1 minute before the market closes. And in all of these stocks, I now have one position. It should be a total of 29 positions. Wait, does this make sense? I think I have all of the stocks open now. So you can see, I have all of the positions. And here in US 30, we can get the 1 minute candle still. But in the stocks, we do not get them because the market is currently closed for US stocks. And then if we, there it was. If we hit like 16:35, the stocks open again, as you can see here. And then we close the position. In this case, there was also a gap over the weekend, which is of course, the huge risk that you have with stock CFD trading, because the gaps can be very huge. And then the trades are just closed again. Some trades win with a positive gap. Some trades lose with a negative gap. Also, in the history, what do we see here? We see that when we exit the trades, here we see it. When we exit the trades, we do have either a profit or a loss, which is, of course, obvious. And then we can pay, or we do pay the swap. The swap here is very, very low, but this is also, and this is very, very important, if your broker has the swap rates in percent, as I have here with IC Markets, the stop is not displayed and calculated correctly in the tester. There's a false calculation because this swap is way too low. This is why I did my own calculation here in the code. I added some custom code for this. wait, where do I have it? Here, this is the custom code that I added. Like every day, my program calculates the stop loss, the actual stop loss, how it would be based on the current swap rate. And I also, of course, take into account the 3 times multiplier and everything. So yeah, so that's pretty much how it's done in my program. And I also made a separate video about how to add this code on the channel. You can find it, I think. So yeah, this is like the calculation that I did here also. And you can see I integrated withdrawals in my test here. So we do see the actual swap that would have happened if we hold the position over the weekend. So we in the graph it looks like this then. So you can see we make profits and losses, and then we have the swaps that are of course calculated correctly now. So this is all the program does at this point, and then we fast forward until we see the next Friday, there it is, and the next Monday where we close the positions again. And that's pretty much it. So you can see everything is done like this every weekend now. On Friday, shortly before market close, we open the position. On Monday, we close the position. So your question now is, why do we do this? Or why do I do this? And I want to show you a long-term backtest now. Here, if I disable the visual mode, now the test will be a lot quicker. Also, let me close these charts. So the test will now load in the background. We do not get the visualization. We just get the graph here in a second. And this is what I will wait for now. So there we go. So you can see the test I created, the graph for the whole 6 or 7 years or whatever this is, from 2018 to the end of 2024. And you can see this would have been a very bad strategy. Like, we would lose a lot. And what can we learn from this? Like, there's such an important, huge learning. For me, the main learning was, and by the way, before someone comments it in below the video, I know this test is not perfect. We do not have like the one stock that is missing here, the Sherwin-Williams, it's not included. Also, of course, stocks in the index are changing over time. Some stocks get added, some stocks get removed. I know all of this. So this test, of course, is not 100% perfect, but that's also not the point. Like, the big learning here is that we do pay the very huge swap over the weekend. It's twice, like the triple amount, like what we would pay on a normal day. And what this test shows is that it is also a very bad idea to even hold the positions over the weekend, because also the trading profits, like if we accept, or if we do not look at the swap at all, if we just look at the profit, also the profit would have been negative. And this is, of course, just a view into like historical data. But what we often see is that sometimes we do see very huge negative gaps over weekends. Like, for example, and I had a look at this before, like, for example, if we have a look at this year, the 13th of March 2020, this was somewhere here when the COVID hit and the stock market dropped a lot. So we had a huge gap here over the weekend. And with this specific strategy, where we open on Friday and close on Monday, we trade this gap. So we create a huge loss. So we have a huge risk with holding positions over the weekend. And I think the chance that you have a very huge negative gap compared to the chance that you have a very huge positive gap over the weekend, I personally see the chance for a negative gap is higher. So this is also another reason why I would personally, at this point, just from what I learned from these tests here, I would not hold positions over the weekend, because we have the overnight gap or the over weekend gap. We do have the increased swap rate, which is just pretty much a safe loss, because we will have to pay the swap rate. And also in the years that I tested here, the swap could have been way higher. Also, it is not always 2.6%, but this test always calculated with 2.6%. So this is my first takeaway in this video. And now I want to show you one thing, because with what we learned here, because this graph here that we see here in the tester right now, it looks very different compared to the graph here for the US 30. So the conclusion is, if the profits are not made on the weekend, then the profit has to be made somewhere else. And except for the weekend, there are just the weekdays left. So the easy conclusion and the next test has to be to test the exact same strategy, but trade it from Monday to Friday. And this is what I want to do now. So you can see in the inputs, I can easily change the weekday or the opening day to Monday, set the closing day to Friday, and then I will say shortly after market open, I want to open the position and close, or shortly before market close, I want to close the positions on Friday. So if the rest is completely the same settings, same everything, I will do a non-visualized test for the same testing period. So the idea here is that we should get all of the profits from the weekdays, and we do not have the risk over the weekend, and we do not have the increased swap over the weekend, which is a great deal, I would say. So let's see how this specific test turns out. So this test is about to end, and we can clearly see it is now looking very similar to the graph that we see up here. So here we have the normal graph of the US 30. The starting point is pretty much the same. The beginning is here. From this point on where my cursor is right now, this is the beginning of 2018 pretty much, or the end of 2016. And we can see the price was around 25,000. And remember, this is also why I, in the settings, set the initial deposit for my test run here to 25,000. So we have a very good comparison, I would say here. So if we now compare the graphs, just by looking, we can see they look very, very similar. We have a drawdown here in the chart. We have the same drawdown in the test. We have a drawdown here. This was COVID. And we have the same drawdown in the test. We have a good period then, also a good period in the test. We have a sideways period, sideways in the test, and we have another good period in the end here, which is, I would say, a little bit less good in the test. But overall, now it's looking very similar. So if we just trade from Monday to Friday, all fees included here. So you can see here in the deals, we have all of the withdrawals here, which is my artificially calculated swap, the correct swap. Then we do have, we have some original swap here also from the MetaTrader. We have a lot of commission, we have a lot of profits, but these are now the actual and pretty accurate numbers, I would say, how this would have turned out if I would have traded it like this in the past, like this exact strategy. Also, there are some more interesting things that I already figured out when I did the analysis before I record this video. Have a look at this drawdown here, for example. This looks pretty similar in the test, actually. But this drawdown here, the COVID drawdown, and this is also what I showed you before. There was, for example, this really, really big gap over the weekend. And the drawdown in the test here, if we exclude the weekends, the drawdown in the test is a lot smaller, which is a great thing, I would say. Also here, this sideways period, it looks like the drawdown here is a little bit bigger in the tester compared to the one, in the actual US 30 compared to the one in the tester. So it looks like the strategy that I created, this very easy strategy, just holding from Monday to Friday, excluding the weekends, it seems to be able to add some more stability. And also, if we have a look at the overall outcome of this, we can see that, do we see this here in the report? The total net profit is, I think we should have a look at the graph. The end point here of my test is around 51,000. I think it's a little bit below this. I cannot really get the perfect point here, but it's around, let's say, 50,000, which is actually more than the normal US 30. So this strategy would have outperformed the US 30. just from the test that we saw here. So of course, as I said before, like swap rates change over time. They might have been higher in the past, they might be higher in the future, but like just as a basis for trading strategies, this could be a very good starting point to now go for more testing. Like for example, you could take this very program here and say you don't invest in all of the 30 stocks every single time, but for example, you just take the 10 best performing stocks from the last week, or you add a moving average, or you add a whatever. Like this is for me a very solid base for a good working long-term strategy. Not the quick in, quick out, scalping, I make you rich overnight strategy, which by the way, in most cases is BS anyways. But this is something that could be very solid. And with a strategy like this, or with a base like this, you have a very good chance to actually like not blow up your account. And this is also what I like over the years, I really changed as a trader also from trying to find the quick in, quick out, get rich overnight, more to a consistent trading approach. And consistent trading approaches are, from my experience, often a little bit more long-term and a little bit more like not so fast and quick-paced. So yeah, this is pretty much all I wanted to show you in this video, just to let you know like what projects I'm working on. So in this video, to give you a little summary, I found out, or in this testing series for me, I found out that holding stocks over the weekend is not necessarily a good idea, mainly because of the huge spread you pay, and you can just save these spread costs and also reduce the risk of overnight or over weekend gaps if you just do not trade over weekends. Also, if you just trade from Monday to Friday, all of the stocks in an index, or in this specific index, you're 30, you can pretty much mirror the performance of the US 30, even with a smaller drawdown if there are some drastic or very quick drawdowns in the index, like for example, the COVID event. So this is the program that I will now work on also a little bit more, try to add maybe some filters, maybe play around with like what of these 30 or 29 stocks I even want to buy at the beginning of a week. But right now I see a high possibility, or I'm very willing to use a strategy like this, maybe this exact strategy or maybe a similar one in another live account. So yeah, that's it. I hope you like this little insight, and maybe you can use this strategy, make it your own, and work with it maybe. I'm out. Have a great time. Good trades. Bye.